Hey, welcome back. We're excited to have you on this episode of STRonomics. I'm Bill Faeth, founder of Build Short-Term Rental Wealth, and that's my good friend Kenny Bedwell, founder of STR Insights. The peace sign, he's dropping the peace sign on you. So today, Kenny, we're talking about the backup plan for short-term rentals. A lot of people are, okay, well, what if short-term rentals don't work? Well, to me, that means you probably don't fucking believe in it, right? So why are you even investing in the short-term rentals? But they want to have an MTR or an LTR backup plan. I am 1000% against this.
Oh, me too.
I've now done 36 startups in my life. I've bootstrapped every one of them, and never once have I had a backup plan of, oh, if this business fails, I'm going to go and I'm going to do this, right? I mean, what the fuck kind of mindset is that?
Yeah, it's kind of like a one foot in, 1 foot out kind of mindset, in my opinion. I get that people are risk adverse and they see a lot of changes going on in the market. Things are very competitive.
If you're risk adverse, don't get into fucking real estate investing. Go put your money in a 5.5% yielding, 6% yielding ETF.
Right. So you can't it goes back to what you were saying, Bill, in the earlier podcast episodes we're mentioning is like there are no properties out there that we see that are quote unquote turnkey that you don't have to put any extra dollars into that you bought. And the reality is that you're gonna have to take some sort of risk when you invest in short-term rentals, and you might as well go all in. Okay. Because if you're buying a property that could be an MTR or an LTR, it's not going to make a good short-term rental. It won't. It won't be in the right locations because MTRs and LTRs are in specific neighborhoods or specific areas that are near hospitals, universities, other places that do not make good short-term rentals in urban markets. And if they do, they're going to be so expensive they won't make sense as an LTR or an MTR. So don't think you can go in and say, well, the worst case scenario, I just go and LTR and MTR that. I did that when I first bought because I didn't know what the heck I was doing. So the problem is that if you are saying that, then you do not have enough education or knowledge, or you don't feel comfortable deep down with your education and knowledge about the short term rental industry to actually invest in short term rentals.
The people that are selling you on that are the ones that are selling you the MTR courses, right? Here's how to do it. I can't think of a market right now, like the what I refer to as the micro market around, like you said, around hospitals, for the travel nurses, that type of stuff, around universities, with the exception of like what pops into my head is like Lexington, Kentucky, but now they're having tremendous regulation, inside where that has been a pretty decent STR. And you can do MTR, around UK in the downtown area. But the regulatory component, Kenny, the risk of that is also a factor that a lot of people aren't thinking about. You could almost be relegated to have to go to midterm with, just the swipe of a pen from one city council member, right, in a market. So it's one of the reasons that, and I know Kenny and I are unified on this, is in the literally the worst market you can invest into, or I should say not the worst, but the riskiest is one with zero regulation, right? And the safest ones that you can invest into are the ones that have long-standing regulation. But even at those, we're getting taxed. The taxation is increasing in almost every market, right? Because they're starting to look at us as a commercial entity now, and that is one of the byproducts of what Brian Chesky has brought to the table with his branding of Airbnb and that type of stuff. When it was home away and just the sleeper vacation rental markets, it was completely different. But I've been fortunate, Kenny, to be around and a lot of successful entrepreneurs in my life that have shaped my life for me to have the success that I've had based on their failures and their successes. Not one, not one can I think of that went into a startup or a pivot, or an internal integration, right? A vertical integration in their business, planning for failure. And that's essentially what you're doing when you're looking to buy an STR and then you want to have a backup plan of MTR and STR. There's going to be compromise in the mindset when you're looking for properties, when you're sourcing properties, when you're sourcing markets, that just won't be conducive for you to be able to max out your STR return on investment, because you're going to compromise to say, oh, I can't go over here. I want to go here. So that way I do have that backup. So I'm closer to that hospital or closer to the university or closer to the business park or Oracle or whatever it is, right? It just doesn't work, in my opinion, right? It's really dilution You're trying to make a double or a trifecta investment, and those are unicorns. I'm not saying it can't be done, but it's going to be very, very challenging. And what we see, Kenny, you nailed this. It's usually the inexperienced investor that is looking to do that. Look, I own no long-term rents anymore. I never got into midterm. I also believe midterm is more saturated than short term because of the shift that happened, during and after COVID into the midterm, because it's a much smaller marketplace, right? It's smaller geographically because you need to have those centralized locations around that traffic driver. People aren't willing to drive 30 minutes for the most part. And there's not as many, we keep referring to universities and hospitals. Those are the two big ones, right? The second part of that is just, man, I don't fucking know, Kenny. I mean, it baffles me. I can't even wrap my head around it. I'm trying to manufacture something here because I can't wrap my head around that mindset. You understand what I'm saying? What's the backup plan for STR Insights? Did you have a backup plan when you started? Oh my God, I think I've got a 40% chance of STR Insights failing. So I'm going to do this, and make sure that I can fall back on that, right? No, you didn't fucking do that. You were going all in to STR Insights, right?
Right.
And now, out of the success that you've had, you've built a successful property finder business, as that vertical integration. I think I should have a percentage of that, by the way, because that started with BK Hot Picks. I'm just saying. So anyways, those are the things that happen. Buy your property. And the other thing is, if you buy right, you should have an exit without getting hurt, right? So if you wanted to buy the STR in the right location in the right market and it didn't work out, then sell it and then go buy an MTR that is in the right location.
Right. Yeah. I was just thinking about, like, number one, there are very few markets where long-term rentals even make sense from a purchase standpoint right now. They just don't. So midterm rentals have kind of replaced long-term rentals as like this, like it could potentially work. But even then, it's not even that much money compared to, you know, what you can generate from short-term rentals. However, even then, like, you still have to learn how to do an MTR. You still have, like, not this, like, knowledge. Like, it's like you're going to try to learn short-term rentals, and then you're also going to try to figure out midterm rentals if that doesn't work. How about you just take that time and just learn about mastering short-term rentals? And when you look at the top properties in every single market, in urban markets and, vacation markets, wherever across the entire country that are of the short-term rentals, the top properties there, they will never make sense as MTRs or LTRs. They just won't. Okay. Unless you bought them at undervalued prices years and years ago. That's the only time it makes sense. But today, buying today, which is what we're talking about, not buying yesterday, but buying today, they will not make sense. And so if you're not shooting to try to be the best in the market, or at least have the top amenities or the things, like, we should be trying to be the best in the market, not average in the market. Okay. So, like, if you're not shooting for that, then you're actually introducing a lot of risk into this investment, or risk of failure. All right. In a sense that, like, it probably won't cash flow and you're probably going to have to exit, which it's not going to make sense as an LTR MTR. So you're just going to have to sell. That's like it. I can't think of another exit strategy at that point.
My number one property, Kenny, literally, I can get about $4,000 a month on a long-term rent.
Okay.
$4,000 a month. No bueno.
Yeah, no kidding. Is that which one? Your Gulf Shores one?
Dragonfly.
Oh yeah, definitely not.
Or, I mean, who's going to the heart of Gulf Shores, Alabama? Who's going to Banner Elk for, long-term rents? I mean, even a professor at Banner Elk that's going to teach at Lees McRae, right, which is a super small university, he's probably making $150K. He's not going to be able to pay me the $10,000 a month that I need on that in a midterm or a long term. So those things don't happen. I mean, that's a $265,000 a year revenue producing property, right? So that's basically, what is that, like $21,000, $22,000, $23,000 a month on average. It just doesn't work, right? And the setup is different for short-term rentals and midterm rentals and long-term rentals. The investment post-close is different. The furnishings are different. The grades that you put in, it's not all the same, right? And that's also one of the things. I won't go down the whole arbitrage side, but one thing I've learned, Kenny, is if you want to be successful, you got to go all in on your business. All in. right? Like I think you said it was earlier in this podcast to where you have one toe in the water and you're sitting on the edge of the hot tub and you have your left leg in, your right leg's out because you're too hot, right? I mean, you can't be that. The right leg's midterm and the left leg short-term rentals. You got to get your whole fucking body into the hot tub and get that body temperature up so that way you're raring to go and put all the effort into one. I think one of the things that I see, and not even short-term rentals, but just people that try to do too many businesses, two or three at one time, that have no experience in doing that, they dilute their brain power. They dilute, their energy. They dilute their focus and being able to really, and then all three fail. We see this in restaurants all the time. I mean, you see your favorite Mexican restaurant or your little mom and pop Italian restaurant in New York, and then oh my God, they open a second location about 5 miles away or 10 miles away. Or they pound through the wall and lease the space next to them and expand. And then what happens 6 months later? They're gone because they weren't truly prepared and they weren't all in on the business. They should have just stayed where they were, which is the analogy for the short-term rental, as opposed to expand into MTR or LTR.
Right. I agree. Yeah. I mean, I've looked at some properties, some of my properties, and to flip them, I did have a couple. See, that's the thing too. Like now, if you're in a position where I had a couple properties like this, and I learned it was actually Richard Furtig. So I'm gonna give him some credit here on this one. And I learned early on. So I bought some of these properties that I turned back into long-term rentals. I bought them in 2017, 2018, 2019. Okay. So I bought them then. They were really successful short-term rentals. But he was like, look, if you're not in the right location, if you're in, terrible areas, this isn't a long-term play. And I was thinking, I was like, you know what? You're right. Like, this isn't a long-term play. And I started to see rents dip about a year after COVID for these places because competition started to increase and they weren't in the right locations. They didn't have the right attributes to be successful. Like one of them, I have a YouTube video on it. It's like the parking was, it was a weird situation. It was a 3-bedroom house and it literally had one parking spot. It's like, yeah, that's not going to make a great short-term rental in a city, a city market. And so it's like, yeah, I'm going to sell that thing or I'm going to long-term rent it. So some of them I sold, some of them I did long-term rents. And but what I learned though, and I'm doing well as a long-term rental, but I bought years and years ago and underwrote as a long-term rental. You cannot do that today. If I tried to do that today, I would lose an insane amount of money on these same properties. Like if I bought them, what I sold them for, they don't make sense as long-term rentals.
I mean, I would challenge somebody that if they're investing into a short-term rental and then they need to pivot a year down the road or whatever into an MTR or an LTR, is to potentially do a return on equity audit, recapture your money, sell that property as opposed to migrating into MTR or LTR, and redeploy into a market that you can increase your STR revenue off that property when it dips. It kind of goes back to a previous episode, right? We talked about it's not a buy and long-term strategy, at least in my opinion, in the short-term rental space. I think you're looking at 3, 5, 6 years. And then, markets come in, things change. You either got to make significant upgrades or sometimes you're better off going to another market, right? So there's certain properties I think that are, super properties that are so vastly over producing cash flow compared to the 75th, 90th percentile that you'll have them long term, right? And if you're paying your debt down quickly, a lot of these things factor in, to the success of a property and the longevity of it as well. So, I mean, the strategy that you deploy, in my opinion, should be all in, whichever one of those three you should choose. And I still am a firm believer that STR is the number one asset class in real estate to invest into by a long ways. And I see, Jesse and Ruben and Rachel and these people that are doing MTRs and they're doing it well. They're at the top of the food chain, like I am in the top in the STR space, right? But for the average person, STRs in markets that are regulated and that people are not talking about on social media. I imagine you're driving a lot of people to markets, I don't want to say that are unheard of, but that are not over invested into those standard bedroom counts.
I feel like though, and okay, I didn't want to turn this into a slide against midterm rentals, but like I feel like people are like you said at the beginning, they're panicking. And it's like the path of least resistance where it's like the MTRs aren't regulated yet, which also is a little bit of cause of concern. But I feel like you spend the same amount of time and the same amount of money trying to get an MTR ready as you would an STR. Like I guess how do you feel about that? Because like
No, I agree. I do think you should be spending less because your return is gonna be less potentially,
sure, yeah,
right?
I
So
agree.
if you're gonna put $30,000 into an STR that's gonna yield $3,000 a month in net cash flow, and you're buying that exact same property, but doing it in MTR that's gonna be $2,000 a month in net cash flow. So you should probably spend $18,000 on your renovations versus the 30, right? Because then that's how you would get the same investment back. But people don't think in those terms, right? They're not thinking about that from a financially driven position. Yes, it should take a shorter time period to get the MTR ready. It should cost less to get the MTR ready. But the reality is I don't see that being realistic for most of these people that are doing it
I
today.
don't and I just don't get the payoff on, like, I don't I guess for me, it's hard for me to be like, go in and be like, "Yes, I guess I'm approaching it from a sense of, like, I know what I know, and the people who are doing MTRs only know what they know," kinda thing.
Right.
Like, I do know people who are very successful at MTRs, but I'm, like, looking at the returns, and success is based off their ROI, but it's just, like, to me, it's I'm like, "Well, freak, I could go and, like, double that with an STR in another market that they might not know of," and so, like, I'm like, "Why wouldn't you just do that?" You know? So but it comes back to, like, what you know, like, the education and your
You don't
knowledge.
know what you don't know.
Exactly.
I want to give you a really quick example, Kenny, because you brought this up about regulatory standpoint. The MTR is not regulated. I've got about somewhere between 200 to 300 homes in my subdivision where I live here with my primary residence, just south of Nashville, and they don't allow short-term rentals. We had a 30-day minimum rental period. 2 board meetings ago, they moved our HOA, changed the bylaws from 30-day minimums to 6-month minimums because they don't wanna have any of that stuff. So there was one house that had like a 2-year lease, and I know the owner of the house, and he follows me, and he went to midterms, and he's because we're so close to these a lot of business parks, a lot of major companies here. So he started doing 30 days, and he was getting these like 30, 60, 90-day bookings that were coming in, and because of him, they changed it to 6 months. And that's not at a, county level, it's not at a city municipality level, it's at an HOA level, but those things will come for MTR, right? Especially when you look at the lack of affordable housing that we have right now in those cities that are hit hardest with the lack of affordable housing are going to be probably the first ones to see 30-day minimums, which is really what MTR is, be enacted.
Yeah. Yeah, and they'll probably do it based off zoning too. Like, it has to
100%.
be zone commercial and blah, 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 and so, yeah, it's one of those things, like, I just as a long-term play, like, is that something that's, is there regulation? Is it established? Like, I just if you're trying to do it as a long-term play, I see a lot of risk with that.
Agreed.
So
So don't go in with a backup plan, folks. Whichever choice you make, you need to be all in.
yeah, I'll add this. Your backup plan just needs to be you need to have a rainy day fund.
Agreed.
Like, that's literally what you need to go in with. Meaning, like, hey, if stuff happens, I've got some funds to cover it, so, I'm not out and I can still, be in the game. But that's the mindset. You're going all in.
100%. I agree. You heard it here first, folks. Hey, one thing before you go, make sure you smash that subscribe button, whether it's up there or down there. Podcast, YouTube, smash the subscribe button. We'll see you guys next week.